Hello, this video is going to be also broadcast in English or Spanglish if you wish. And my intention today is also going forward with in more detail with the market maker programs, so you can all understand it uh, in English, because I've already created a video in Spanish on previous um, weeks in which I was explaining that in Spanish language. So there are a mix of things you need to be aware of when studying the programs that the market makers are creating, and what does it and what it means. So let me reduce the volume of this and lower it. So the first thing is that we have expansion and contraction phases in markets. That's the first thing you need to be aware of. And if this is a contraction or consolidation, it's used creating a pool of orders, a pool of liquidity that it's finished when you see this price is just grabbing the stops, clearing the stops above these highs, and the price is released, so that the price generates this expansion, which would be the other way in which markets behave. So we have accumulation. We have also power 3 manipulation, but we are going now to ignore it. And expansion, and then it ends with so we have expansion, and it concludes with this within this accumulation again of um, contraction. And this is what is all about. Now we can also provide names to these phases. We can say that when prices are falling, it's an accumulation, and when prices are moving up, it's a distribution in terms of supply and demand. But I think it's too confusing that. So we could always thinking in accumulation when prices are being consolidated within a range, within a tight range like this one, and then orders are being distributed to the upside, to the downside, but there is a distribution of something. And more specifically, when we say a market maker buy model, we will be talking about accumulation, because market makers will be buying as prices are falling, so they will be accumulating here. And if prices, you see that they start to fall again, then we will have a reaccumulation, another reaccumulation, and now here a inverse program starts in which market makers are selling, because market makers and smart money in general is selling as prices move up. So they knew, theoretically, the algorithm knows or controls prices. That's the basis of this system. And now the algorithm has already bought everything. The algorithm bought everything that was needed, and now the algorithm start to sell as prices move up. And this is a distribution, which is this expansion, now generates here a consolidation, redistributes, generates a consolidation again, redistributes as prices moving up. And this is the basic idea: expansion, contraction, distribution, accumulation. And now there is a structure, there is an underlying structure, which is and it is maybe the main part of the private group, because I think it's the most important thing when you need to know to understand the cycles within the markets. And it's that there is a structure, a repeated structure within all this. Now, and this is what I usually refer as level 1, level 2, level 3 when I'm speaking about market maker programs. So what we look for is a initial move, initial beginning of something. So I'm going to use a trend line. So if I have this move, this channel per se, it's something that it's different, is completely different and has another character different from this one. Then this other channel, you can see that is a different entity within price. Then we have this fall here, and something new starts. And now this move here has common features within all these fall, which are quite different from this prior one, but it's more like, yeah, it is a body. This is a common body within all this fall that was not here, that was not here. It's different. Now we have this consolidation here, which is more like a horizontal channel, a retail horizontal channel, and this grab on liquidity, and now prices are moving up. So this is fractal as well, because you see now we have this move up and ends, and this quick move to the upside, it's abrupt, it just ends here and generates a second structure which is completely different. It's like this. So we can see that here the market maker, it's creating different type of templates or program or moves, shapes, and now we can see another one here. And we need to study and practice a lot to start to differentiate and identify those moves and structures. So we have this another one which is very different, a move to the upside, and concludes with this horizontal move. Can you see it? And we can extend it and take all the horizontal lines here. And what I try to explain on my videos is that inside of each of these structures, there is always a repeating pattern that repeats itself all the time, and it can be explained through the market maker programs or models that are taught by Michael Huddleston. And I saw videos from a lot of years ago, and now he uploaded to his channel. I've shown that on my prior video on market maker programs and live video. It's the previous one, or the second one before this, and explain that in the Inner Circle Trader channel on YouTube. He explains this. I think he explains this, but he talks about the market makers. So what I'm trying to explain this here is that then on the private mentorship, as the private group, say, I explain this in much more detail. But okay, just to start to work with it and to have very good deals and to develop a good strategy, you don't need to go through to the private group. I will say this: I want you to be sure that with my content here, you will be able to develop a good strategy based on smart money concepts. Now, let's say some examples. There are more or less like three types of ways for analyzing this. The first type is when it's horizontal, it's diagonal, and then it's vertical. So, but everything is the same. So the retail world would be seeing this as different types of moves, structures, but we can just summarize it into types of moves. And now this transcends what we understand by expansion and contraction, but it's related because sometimes when the contraction ends is when the program ends itself and releases prices into another same pattern, but now with a extended shape, but it's always the same. So this won't be helping us. This won't be helping us to understand or to predict where prices will go later. But we will be at least safer or more sure that we are taking entries or exits at the right moment when prices are about to move, and we will be reducing our chances from being wrong due to this. So let's start to analyze this. And I used that yesterday. I was not having a lot of time to do this, and today I have a bit more. So let's see. Now let's identify any. I'm going to move backwards. Use this here. Use this default here. This, so we can see we have, and it's fractal as well. See, we have this, but above this and upon this, we have a higher time frame, which is also this one program or model. And at the same time, we could just zoom out and say that no, that the program that we are just dealing with is this one. Let's say, or this one. All the range, thinking the OTE entries, and you now think that everything here is the same program. All this move is the same program. We can look at this from a lot of ways. Now it depends on the size or the magnitude of the entry and the time frame we want to work on, that we will be just marking the levels and the structures. Now let's see this basic. Okay, we have fall. Now prices move up and they seem to be mitigating over this area of old buying liquidity or long liquidity, and we want to know if we can sell this. So we start to understand the principles of these schemas, and these types of programs are more maybe they were explained by Malakir better than me, because I'm just using a very generic approach. I'm not paying too much attention to the number of steps. It's just it's just a schema. It's not something that will always have this shape. This could have this shape, for instance. This one could be different. So it has variations, but the idea is being able to identify if we are either in a, like this one, a distribution, so prices are going to be delivered lower later, because when the distribution phase ends, what happens is that the market, it's empty from orders, and the market maker needs to grab more orders to buy more orders, and when the market maker is grabbing or buying orders, prices will be falling, because the market maker won't ever buy at higher prices. Market makers and the, let's say, the institutions and smart monies will try to always buy at the lowest possible price. So when prices start to fall, they will be buying. So we need to see, we want to sell a market maker sell program, and so we try to identify which is the structure that it's been taking place, here. And we don't use trend lines at all. I'm using only trend lines at all. I'm only using trend lines so that you can identify easier this structure, but I'm not a trend line trader. I won't sell this breakout and nothing like that. That's retail stuff, and I don't trade retail stuff because I trade in another way. So it's obvious that the move stops here. There is some divergence here, so we can see that maybe there are two different structures at the same time here. Maybe this one and this other one could make more sense here. So we have the end of this move, the end of this fall, and what it's a fall from our perspective is an accumulation, and it would be potentially a market maker buy program. It doesn't have to be all the time like that, but it's what we think. So the market maker ended, finished buying. Now the market maker will start to sell what they bought. That's the logic. So we see that the market maker buy sell program. If we want to sell this mitigation here, it's 1, 2, and 3 more or less. So it's just placed in 3 steps. So we see here that this move ends, and then here, yeah, we could say that there is a different structure, which is a diagonal structure and more slower. Okay, it goes slower. It was just a fast quick drop with long candles. Instead, this is a lot of candles compressed and moving upside to the upside. So we have the beginning here, and we can start to count. So this is the first one, but we start to count. I like to start counting here. This will be 1. This would be another level, which is the next level here, more or less. We have another level of consolidation. 2. This up move breaks here higher, and we have the third move. So it's not that we are willing to get 3 moves by itself. If it's that we like to see at least two levels, and then hopefully a eventual take of liquidity that usually will imply taking highs like this. So this could be a valid high, and then we have this high here. See, and now there is confluence, and this is the market maker sell program. Now here we have another move. You can see now prices are falling, are breaking structure. So then all these things that are also studied or analyzed on the smart money concepts can be applied here. And at this point, now we see a fall price. Now we start to think, okay, this fall may eventually retrace because prices never go straight forward. They usually move back and forth all the time. Okay, the prices are all the time like this, so we shouldn't be fearing to see retracement. So now what's going on in markets? What's going on this market after that? We have this structure that is completely different. We can differentiate it, and we can summarize it as a channel. So it's not that we are going to trade a channel. We don't trade channel stops, channel bottoms. We don't even trade all the blocks or anything at the top, because top and bottom is geometrical trading, and that is retail trading. We are trading institutional order flow. It's different. So yeah, of course, we will be willing to sell if we can at the highest premium price, but if we don't have the highest premium price, we will just try to find what is premium at this moment on the market, no matter if the premium is at the highest point or at the lowest point right now. It's not important for us. So now this starts to fall. We have here, maybe this fall could be the first level. I don't know, I haven't counted it. Could be level 1, and now it falls again, creates another accumulation, level 2. It falls again, creates another accumulation, level 3. Okay, 3 levels falling. It's enough for a market maker buy model. Other things should be here in order to decide that this would be the precursor of the cause for a price to move up, or should deliver a prices moving up and breaking these highs. But for now, we at least see that this is the market maker sell model, and what happens afterwards? Prices are just moved up, and they test these areas here and fall again. It's okay. We have here accumulation, distribution, and reaccumulation. It's okay. It's okay. We don't mind too much about this. Now, at this point, there is another block here, and we don't use trade because we see another block, as we don't trade because we see a trend line, as we don't say because we just see a horizontal line or anything else. We need to analyze the order flow again. So now we think, what's going to happen here? So should we send this other block? Shouldn't we? I think that the other blocks, and as Michael says, the best order blocks are those order blocks that are created outside taking highs or taking lows. So I created outside the range, so there is nothing else on their left side in this case that has already been traded at that range, and this is not the case. This order block has been traded, has been created within an area of high negotiation, high prior negotiation. So this order block, yeah, see here this week you could have a decent 1 to 2, 1 to 2.5, something like that. Trade here, taking just the whole order block, maybe 1 to 1, 1 to 1 to 5, 1 to 1.5, but it's not a high probability order block because, as I say, this area, yeah, it has a lot of accumulated volume inside it. There is a lot of liquidity here resting here, but there is also a lot of activity being placed here before, so probably all this liquidity was created there just to engineer price, not just to finish any program. Now what we have here, this move up, we have another market maker program always, as we have it, another one here as this price falls, and this is more difficult to see it, but if you realize, we have the beginning of the move starts here, level 1, falls, this bar breaks there and creates a retracement, then used to mitigate this imbalance. So level 2, another break, another move to the upside, so something is going up and down here, level 3, and after level 3, what we have, taking liquidity and moving up. This is the market maker buy program. It's very fractal because I'm just highlighting the main moves here, but you see that if you realize, look closer, it's not that simple because we have level 1 here, level 2 here, level 3 here from an accumulation, and when we have later lows taken out, order block, and released price to the upside, taking all the highs, because the market is all the time taking the highs and the lows. That's what markets do. Markets do that all the time. So the 1, the 2, the 3, market maker buy program. Boom, order block to the upside. Now you could be thinking, maybe someone could be thinking, I could be thinking that this could be maybe the beginning of a bullish program. Yeah, why not? It could be. There is no reason why this couldn't be the beginning of a really high, strong program. We need to, of course, to study the confluence of other factors. Now, it falls and it begins to move up. Maybe you see what a mess, how many weeks. Then you need to simplify your analysis. Keep it simple, stupid. Like that. KISS, I think it's KISS, what they say, keep it simple, stupid. And the way to keep this simple and keep it stupid is just to take the highs and the lows. And also Michael always saying the same thing, look at fractals, look at all highs, at all lows, low here, low here, low here. So another high, another here, we have another one here, another here, another here. So too complex. So let's take only major swings. This one, this one, this one. Let's say maybe this one and this one, this one. See, prices are obviously moving up. You don't need nothing but eyes to see it, and you can now see that the moment it's bullish. So this is beginning. Let's say this is level 1. Moves up. Create this consolidation here. Yeah, level 2. Now another consolidation, level 3. Breaking market structure here. I would say, nah, here you didn't got this high broken. Yeah, we didn't. You don't need it. That's why we use also multi-time frame analysis. That's why we use multi-time frame analysis, because it's just something generic what I'm explaining here. It's not that you will get exact 3 levels that you will be counting. No, because you said it was 3, but I see this one, and now I see this one. You just selected this at your convenience. Yeah, I did it because my convenience is what allows me to sell or to buy when I think I need to, and that's what I select what I want. Okay, remember here that you don't trade or you don't arc or have a conversation about trading, a discussion about trading because you want to be right. You do this because you want to make money. So if you are right, you're not. You're better, or you're worse than others that really don't fucking mind you at all. So here we have the take of the highs. Okay, here we have it. I was just more generic because I'm just looking at this distribution, and now we have this breaking structure here, and the highs are retested, and it falls. Level 1, level 2, level 3. Boom. Let's go move down. Now can you start to see the moves? This is the initial move. When is the market stopping? Here, accumulation. Here, reaccumulation. Okay, and now it falls even lower. So level 3. Now it didn't went up. Yes, this is not a cyclic of consecutive expansions, contractions that are alternative accumulations and distribution. This is just cycles that end at a certain point and then something else, and you don't know why. That's why I say that this is not good for determining the future trend or the future move, just to see that the cycle ended. And then you need to analyze what's going on. Are you going to buy here? No. Why? Because prices are moving down, and we also need to check structure. So how are you going to buy this? Well, but you said this is the buying program. Why is not why are not they buying right now? No, they were buying as prices were moving down. This is not a program for you to buy. This is the program or the model in which the market maker is buying. They are buying as this falls, and sometimes when they finish buying, they start to sell, and then we have the sell program moving up. But it's not that you're going to buy after the program ends. It's that the market maker is buying. Okay, that's the difference. This is not simple. If it would be that simple, everyone will be making money, and that's not the case. So now prices move down, and we have also here level 1. Okay, now level sheet. So we have here. This is harder to see. Let me see, because I cannot see even. Let me analyze this. So what we have here, this is interesting. This is not clear for me. Maybe it's maybe sometimes programs are created at the lower time frames, and you or me are not really able to understand them well. So we could see this is a buying program. So this could be the start of the buying program. So we have here the beginning of the program, and yeah, the beginning of the program. Okay, see. And how can we analyze this? It starts here. Okay, level 1 here. Let's say level 1, we have these levels. Now retesting the beginning, and we have the level 2 more or less here, and probably this would be level 3. But what happens after this? If this was would be a level, a buying program, what will happen afterwards is that it may be, after accumulating, could be just distributing, but it's not the case. What it happens is that yes, it distributes, but not like completing this specific program in terms of magnitude, because we don't have an equivalent move expanded twice or 3 times the size of the initial program. That is what we usually would be expecting. We see this accumulation here, and we just study what happens. We don't try to guess. We don't try to be right, because if you think that you need to be right and you have determined, said that this is a buying program, you will be buying here because you think that you need to be right. This is a 100% certain buying program, and now it must be distributed somewhere after these lows were taken out. Yes, here, but not taking highs as we will be usually expecting that this program leads to. So we have here the same thing: level 1, level 2, level 3, breaking structure. here retest of order block, and same thing here. Now we have here the buying move, level 1 and level 2, level 3, buy, falls, level 1, level 2, level 3, moves up, level 1, level 2, level 3, falls down, level 1, level 2, and level 1, level 2, maybe level 3, this moves up. But again, here we have this specific fractal pattern. Usually when I see these small wicks, these small patterns, what to think is that this was the take of liquidity. So this means that this is level 1 because this is fractally, it's very micro, it's like a micro structure. So it was level 1 here, then goes to level 2, retests level 1, this goes into level 3, retests level 2, and then takes liquidity outside this range, and in this case taking these highs here, and then it moves down because this is a market maker sell program. And we have structure here, as was saying before. We have structure, and we need to be aware of the structure. So this is the structure, and we were here. Well, we have this. Okay, so it's obviously, this is not a bullish structure. So if we see a market maker buying program, we shouldn't be buying it if we don't see this structure change, because we are still falling. And as we say, don't try to catch a falling knife. Now here structure changes, and sorry for my English, I try to make it the better I can. And this is like when you, I don't know if you play music, when you learn to play an instrument, but when you're good already at the instrument, or less good, and you start, for instance, trying to add another instrument upon it, like a guitar, harmonic, or you want to sing on your piano, it's very difficult to combine both. And as I'm trying to analyze this chart and speak in English, it's not that easy for me. So here's the main structure that we will love to see, and it's one of the most powerful patterns that we can find on markets after the market maker program ends. And as we see here, the market maker sell program ends because we see a lot of stops, and then prices are released again and fall again. So something about market maker buying, it's happening because the market maker is buying as prices are falling. So this program. So what we have here, it's very interesting, and this is one of the most powerful patterns we can find on markets. It doesn't mean that it will just go to hell, to the moon, to heaven, I meant. Well, hell could be also above, who knows? You know, there is no up and down in the universe. However, I'm atheist. I'm atheist, so I don't believe in every religion. So I was just joking. We see another block here below, taking lows, taking buy side liquidity, very obvious buy side liquidity, and it's strong. All the blocks, strong candle, very, 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 very bold, a good one. And now we see a very strong. This is the footprint of smart money. Usually, you see this long move, this strong move, breaking highs. This is breaking structure. So what is structure here? It's a swing high. This is a structure point. Okay, so breaking structure here. It's broken. It moves down. Just testing the breaker here, and moving up again, breaking again this high. So we have two breaking structure. There is, and this happened also at discount prices where the market maker buy program ended. And now we have here also liquidity created below these equal lows, and the price just falls. And what it's doing is testing this order block area, this bullish liquidity area below these lows, and probably filling this gap here, this fair value gap or this imbalance. So having this and finding this a way to buy this, going to a lower time frame, usually I think is one of the best entries that you can have. because you are now again on level 1 of your solve program, and it means that the market maker is not going to finish until at least they get into level 3. So the basic view of this, the basic analysis would be that you can see consecutive breaks in market structure. You at least need 2. I would say that you need this one, then prices to fall again into a significant point below the mean threshold of all this range. So meaning if it is above the 50% retracement from the bottom to the top is not valid. And touching this other block, I will say that it's already valid. Yeah. Some of you which are more knowledgeable at smart money concept will say that it's not enough. I agree with you, but we are not discussing very precise terms here. We are just showing that this other block here, after this break in structure, after this testing again this other block, creating this low, is what we usually call the smart money shift. And this is very powerful, this structure. So print it or take notes or just try to I don't have visual memory. If you have, better for you. Now after this is broken, okay, after this happens and this is broken, we are really bullish. We should be bullish maybe here already, but we still don't have a strong confirmation because this was just a very weak move and we need something stronger. So this is a weak, poor, loser trader market maker sell program, just created to FOMO people that are buying this up move. Just take them out of the market, take the speculators out of the market, because the markets need to take the lows, to hit the lows, so don't buy this. And now when the lows are taken out, we are retesting already the area below or at the top of the body of the other block, and now things start to move. And study this, and if you can find here ways for entering, you will really get very cool deals with it. Not only with this structure, I repeat, nothing I've said on this channel can be used for trading alone. You need to put all the pieces together, test it very deeply, and then decide how you're going to combine it. So the idea within the channel is just to reduce the concepts and the ideas and the structures to the minimum possible. And the minimum possible analysis I do all the time consists basically on what I've put on this video and the private mentorship and the private group, because it's not actually a mentorship per se, but it's more a private group. And the idea behind this is that with this you have more than enough, because you can count here as well. So you have here level 1 comes back, so here there must be another level, so we could be saying this is level 2, okay, and this could be level 3. Yeah, I only see 2 levels, then use multi time frame as I was suggesting before, because now because if you just rely on this time frame, you cannot see what is going on this return to the order block. This is RTO, return to order block, and a smart money shift. But if you don't go to the lower time frame, you cannot see what is happening fractally inside this. Why? Because you can see it here, because it's just a trap for buyer, for channel buyers, for trend buyers. It's a trap for them. But here markets move really quick because it's a market maker who is interested in moving prices down, taking everything they can as soon as possible and just release prices. They don't want others to come in, or they don't want to leave time for others to anticipate to their move. So they move really fast. But if you go to the lower time frame, I can use the replay here maybe. If you go to the lower time frame, like, I don't know if I will have data for that. I will try to. Let's say 2 minutes. I think, yes, we had. I don't know. Yes, we have. So now if you go, this was this. I think, I don't know if I have. Let me check again, because sometimes we don't have data. And okay, yes, we're right. So now, what is the control here? So if I start to see what's going on after this grab of liquidity and now expecting these lows to be taken out, this is the order block, and now we are refining 2 minutes. You can see this order block that should be your point of interest at this very moment below the lows, and it starts to move. Now we can start to see levels here. Yeah, so how do I know which time frame should I check? Check the one that shows you the structure. That's it. Now we can see very easily, this is the initial move, false level 1, false level 2. Okay, there is here another level. Yes, 1 2 3 4 5 6 7 25. Okay, let's just try to find a common structure, something. Let's try to identify the structure. Level 1, consolidation, so accumulation. Level 2, reaccumulation. Level 3, the order block. We're good to go. Maybe. Let's see if we see a break-in structure. Now, this is the hot spot. This is really the place when we want to see break-in structure, strength. We want to see now candles just moving to space. So let's see what we see. Now we have here a very, very interesting pattern. Do you remember what I said before? Do you remember this pattern? I told you before to take notes or to take a snapshot from it. Now go to the notes or snapshot, otherwise you will have to remember it, because I am not going to show you again because I told you before to take notes. Okay, now what's going on here? Okay, what we see here, 1 2 3. Oh, not good yet. Now we see the break in market structure. Now we're good to go. You can go directly from this point. Yes. You can wait for retracement. Yes, as well. You should put your stop loss here, maybe. Or you could place 2 stop losses on 2 trades, one below this, one below this. Everything is possible. As long as your money management is good, you can do whatever you want. And now we're good to go. When prices come down again, we retest all this area, which, because this other block is one thing, but this is the last down move actually. Now you're good to go. So let's see. Should we enter twice? Maybe I have to enter sometimes 3 times. And how could I avoid losses here? You cannot avoid to lose. You can maybe take partials and lose less that if you wouldn't, but you can also make fewer money. Now it's a good place for taking now you can see the levels, the 3 levels and the graph of liquidity below it, and this is the very strong pattern I told you should be aware of. Grabbing lows, breaking highs, coming back into the smart money shift, and now, which is your first goal, your first take profit is this high. What are markets making all the time? They're taking highs and taking lows. I told before, moving up and down, moving forth and back and forth all the time, taking highs, taking lows. Now you're good to take here like 50% if you want, maybe. Okay, that's good. And which is your RR right now? So let's see which is your R. Is you made what I suggested, that taking at least one of those trades here, like this, just now I'm not very good. So now, okay, let's say that you entered, what was suggesting to enter at this area, more or less. Okay, so let's take the lows. So let's take the lows as the entry point. So if you take the lows at the entry point, you're right now at 1.6. So here I think Michael says used to be taking like 20%. It's a good place to take like 20% of what you want. If you were waiting for this to stop falling, maybe, and see the first white one, okay, it's more or less the same. I would be usually taking entering at this high. So I will use this high as my reference area for entering. So it will be, yes, more or less 1 to 5, 1 to 5. But you can take here how much? Maybe you can take here 25, 50%, 80%, 95%, what we want. And now you move to break even. Now let's move to break even. And what do you see here? Now you maybe now maybe you guys will be only looking at the highs and looking at what you can make. Remember, you need to be aware of the markets, not about your wishes and what you want. Remember, because now what's happening here? Level 1, level 2, oh, level 3. So you need to be very careful with it. And now you need to start taking partials as prices move up and nothing else. Does it mean that prices are going to fall after this move to the upside? No, not necessarily. And it doesn't, because you have this powerful pattern I told you. So where's the point in which at which this sell program buy program started? Here. So this is your first point when you think that prices are probably going to reach for probably there. So let's move to forwards and see if we get that point, if we get that, or we are just tapped out. It seems that it's late, it's night, overnight. So overnight, and you can decide whether you can scale in, scale out. So now you're tapped out, and if you took here partials, you made money. Otherwise, you're now underwater. Bad luck. And that's it. I think explained quite extensively what I mean when I say level 1, level 2, level 3, market maker programs and market maker models. This time I've been doing this, and I've already developed my own vocabulary, and sometimes I also forget what I studied years ago. So it's enough for today. I don't think I'm going to release a lot of things more in English, because it takes a lot of time, and I usually like to edit what I say, what I do, what I make here. But with this thing you explain here, just take the structures, say take the videos from 1 to 5 first, from 1 to 6, I don't know, and most of the content, most of the information I'm delivering here is there in 5 videos, in 5 hours, in less than 5 hours, and up to video number 10 or so, 15, before extreme trades or smart money concept video begin the series, is just the core of everything I'm explaining here. It's not, I don't want to extend this to the infinite. I don't want to be here explaining new things all the time. What I'm going to do, and I'm going to repeat over and over, is just adding some extras, adding some information. But the lesser information you need to analyze, and you need to take decisions upon when you're trading in real time and risking your, because there is a lot of pressure on that, your money, the better for you. So and this is algo, I think this is something I think that I've already decided to accomplish on the private group, is just to reduce the contents, the essential contents, at least. Yes, I may be adding a few more things, or maybe more things. It depends on how it goes, because this is just something, a project which is new. But I want to keep the essentials to the minimum, but to the most powerful concepts or types of analysis I can deliver, I can explain. Because if you have only a few rules that allow you to take risk reward ratios above 1 to 10, above 1 to 20, maybe usually you're going to just get 1 to 3, 1 to 4, 1 to 5, 1 to 2 when you don't lose, because we all lose when we're trading. We all lose. We need to lose because markets have some randomness, and we lose sometimes, and we take bad decisions, and we have sometimes bad habits or emotional decisions, and we are humans. But if you can just be targeting 1 to 10, 1 to 20 on your trades, okay, it's better that if you only try to target 1 to 2, because if you miss and you only get one third of what you intended to do when you're targeting 1 to 10, that's 1 to 3. And if you do the same when you're trying to get 1 to 2, it's just 1 to 0.7. So the difference it's 4 times better. So that's the idea. And just to finish, another consideration I think I'm using quite often here is that, let me remove all the drawings, is that how can I identify uh, a market maker program if it's bullish or bearish, because this is a mess for me. Yeah, first of all, you need a lot of patience for this. I will say that any person that wants to just trade, minimum 1 year to 2 years, 6 months maybe, to understand, to start to spot for yourself the patterns and the structures and everything. But you need time for this. It's not easy. So you first need to work hard. As you are not, or you cannot work hard on this, and you cannot devote a lot of hours, effort, frustration, and money to this, you won't succeed, because it's difficult. It's very difficult. There is not another reason for. So you just draw the trend line. So what are retail traders thinking about this? It's an uptrend. The bulls, they say the bulls are strong. The bulls are shit. Okay, this is not something that it's just because they have bullishness power. That's why I don't like saying bullish. It's just because the market maker is just increasing prices. Just that's it. They don't need volume. They only need to press a button, and prices will change. There is no oversold or overbought in forex. That's absurd. Now, if you see this line, what is this? This is money. Here below, retail, as market makers take the lows, they take the trend lines. The same money, retail money below. So buy stops, sell stops here, bullish power. Now we are in the sell program. Markets are selling because prices is moving up. When you see the trend line, that is just moving to the downside. Market maker buy program. Market maker are buying. It's falling, and money here. A lot of money. Retail money here. Expect prices to eventually take all this out, clear this. That's it. And what about the horizontal lines? The horizontal lines. You need time because it's not horizontal at all. The thing is that you use your poison, your brain is poisoned to see on a horizontal line here. But here what we have is just that this cell program ended here, so something else starts afterwards, after what I told you. Just find common structure, common features to define your structure. This ends, so here starts something else. Here is not a bullish, it's not a horizontal channel, it's something else. Is it bullish? Is it bearish? Let's see. Let's name this level 0. Let's name this, let's call this level 1, level 2, maybe level 3, maybe. Oop, taking highs. It's not a horizontal channel. It's a market maker buy program, because on average prices are falling. You see how it's falling. So retail sellers here, they take out liquidity. Everything is selling here. Now the price, the market is on the hands of the bears. It's bearish. No, it's not bearish. It's just the market taking lows to then take the highs. Today take the lows. Today taking the lows. This equal lows taken here. These highs taken here. These are the highs. These lows out. These lows out. These highs out. And eventually these lows will be out, and these highs will be out, and this as well. And that's what is happening. So there is not a market maker buy program, a market maker sell program. Is all the time a combination of all of those. Level 1, level 2, level 3, out. Level 1, level 2, level 3, out. Level 1, level 2, level 3, out, out. Level 1, level 2, level 3, out. How do I know? You don't know. No one knows. You need to use multi-time frame analysis. We're repeating that. And sorry, my pronunciation. And the structure. That's it. Bye bye. I'm going to check if I have anything on the chat, because yesterday were people chatting here, and sometimes I don't have anyone, so I won't have to answer. Yeah, today I don't have anyone here. There is an error. Okay, this is working. So that's it. Have a nice weekend, and I hope this helped you understand a bit more what I'm explaining here. It's quite simple conceptually what I'm saying, because you don't need to make things complex where they aren't. The more complex thing is just to put everything together, to be trading, and to be aware to spot it in not on hindsight but in real time. This is the hard part. So now let's take a BTC, Dogecoin. No, I want to take one shitcoin. I think there is one shitcoin there. Yeah, shitcoin. Yeah. So we have this shitcoin index. Oh, that's amazing. USDT. It doesn't exist. Shiba Inu. This one. This is another shitcoin. So now, what do you see here? I see level 1, level 2, level 3, graph of liquidity here. And now, is this a clear order block? No, it isn't. It isn't. So, but it is a order block, yes. But why are you looking at this order block? Because I like order blocks. Everyone talks about order blocks, yes. And what about mitigation blocks? Is that so good for you, mitigation block? Because ultimately, what you're looking for is the last up move before price fall, which is the last up move. Yeah. This is the last up move. You don't need to reach this order block. And you have this mitigation. What you have here, now go lower time frames. Beginning here, level 1, something came back. So level 1 here, level 2 here, level 3 here, taking out the highs. So this is probably going to fall. Where to? It's going to fall. Let's see, which is the structure? It's bullish, it's bearish, it's bearish. Oh, sorry, I said bearish. So, which level are we at? Level 1, level 2, level 3, retesting level 2, level 2. Yeah, we're good to go probably, because now it's going to be retested level 3. Why? Yeah, very easy. Something I've seen before. We've seen before right now. Because after this take of the lows, what we were expecting, yes, taking the highs. This occurs here. So it's breaking market structure. Well, breaking market structure here, breaking market structure. Yeah, but this is the breaker. The breaker is moving. Yeah, but breaker is not the discount. The discount is below these equal lows. This is your point of interest here. So prices are just probably now going to fall into this order block. I have here another order block. Yeah, you're right. You have here another block. See? And we've said about what have we said about this other block? That best other blocks were those that were not traded before, and this has been traded. See how many times this area of liquidity has been traded. This even retested and mitigated after this, and we have these equal lows here. So could it hold? Yes, could hold. It could even now hold this one here. This is another other block. Could hold and move up, but it would be nice seeing this below here. And besides, and over everything I've said here, the most obvious thing is that this is a descending structure. It's descending, and we have here premium, and you have this unmitigated order block that it's mitigated already. Yeah, it's mitigated. So we have this order block that is it's been mitigated. It was mitigated before by this. So now it's falling, and probably it's falling. For me, that's the most problem outcome of this. And how should that be? I want to be sure about this. Well, let's go 15. Let's go to the 1 minute chart. Oh, breaking market structure. See what I told you before, which is the pattern I told you before. Taking liquidity, breaking structure, and moving up. Small money shift. Well, but Michael says that the order block is not a wick, that the wick, yeah, but this is the order block, and the wick is part of the order block. And beside that, on lower time frames, you have order blocks here, for sure. It's just that you randomly, or it's an arbitrary decision just for you to choose an order block or a time frame. So you go for to this 15 seconds time frame. Oh, see the order block here. Do you see the order block? There was another block here, and what happened is my money shift just went to take the highest possible available price. So, and I'm going to just reduce the width. So it took this area here inside this order block, and it felt perfect price delivery. So it's all the time the same, and this is 15 seconds. Now what's pricing going to do? Do you see this highs? Pricing is going to take liquidity above these highs, probably. You have here these buying param ends and sell param starts, buying param ends, sell param starts, and now buying param ends here, and sell param starts. We're expecting it to reach these highs here, and this one, if this continues, this highs here, which is the closer liquidity area. So we have this here, and then we have this here, and then we have this here. See this here. Now we move back to the 15-minute chart, and we are good to go. From the 15 and the 5-second standpoint, this is a good place for selling. Okay, and that's it. I think I can be talking here until tomorrow. So it's for sure that prices are going to fall. No, I don't know if prices are going to fall. I never know it. I don't know anything. I don't have a crystal ball. I'm not a foreteller. And that's it. So maybe, yeah, I'm going to just mention what I think is going to happen. So see level 1, I told you before, level 1, level 2, and I think this is level 3. I think it's not likely, and this is an obvious retail trend line, so prices are going to eventually fall. The actual cleanest area is those highs, okay? But inside this, if we go to the 15-second chart, inside this, you also need to be aware that there are those structures at the 15-second chart. So if we see here started something level like, let's say, this one, level 1, level 2, or level 1, level 2, level 3. So if we see now changing structures here and shifted gears, we could just consider something is going to happen. So I think this is level 1, and I think this is level. So I think this is level 1, level 2, and this is level 2, level 3. But I don't think it started here. I think this is level 1, level 2, level 3. There we have another move. Then we have another structure here. See these 3 candles, and now here starts something else. Okay, and now this is level 1 or 2 or 3. This is retesting the highs and falling down. So we have also the same here, a grab on liquidity, retest of the highs, and prices falling. And that's it. I think this would be a good place for selling because it could be the smart money shift, as I mentioned before. So if you take this as the smart money shift, and you would be selling here. Let's see. Let's say you take this as your stop area, stop loss, just a few pips above, and you sell here. And now you intend to reach this. You have 1 to 5, but of course you are 30 seconds, which is ridiculous. But this would be your first. This would be your first area of interest here below. Now you move a bit, like 2 minutes. And you see this other block here, and you see these equal lows. They say, okay, I want to just take profits where maybe here when you are 2.5. Or I will take 20% when prices just are arriving at these areas here, and then I will lock my profits by moving to stop to break even here. But for now I'm just waiting for prices, and if I see that price is just going against me and entering within my stop loss area, I can scale out and reduce 20% here, or maybe 50% here to reduce my potential loss. Because I don't see, now you see this other block. I'm going to see this big other block here. It's amazing. This is institutional footprint because you see the size of these other blocks. You see the size of these 2 other blocks. It's obviously institutional footprint. Now, as prices are just reaching these lows, this is the rejection area below these lows. Now you can take like 20% of what you had now and wait. These other blocks should hold. If it doesn't hold and this high is taken, you are really I should be, I think, scaling out. I would be scaling out. This is taking out. Yes, it could maybe yet reach this area, but it shouldn't. It would be good. It wouldn't be good, because what we're expecting to see from now on is just breaking structure. So we had the first breaking structure here, and the next breaking structure will occur here. So this is the next breaking structure. Another structure will be broken here, and the beginning of all this thing started down here. So this should be our primary target. I think this area here should be our primary target. If we think that price is going to sell, I think is the most likely thing that will happen, and as per the structure I can see here. So let's see. This is what happens with in real trading, that you need to wait a lot, and this is only the 2-minute chart. So if we were using the 5-minute chart, 15-minute chart, 1 hour minute chart, it would be very long. So I don't know what to do because I don't want to be here just waiting for that half an hour. Okay, so okay. Yeah. Go, Diego. Sorry. Yes, I used yesterday. I didn't see the chart. I didn't notice that there were some questions on the chat, and as I just clicked to close the window, I saw the word written market maker. So that's why I'm creating this video today, because I just saw that yesterday. And that's it. So this is Shiba Inu USDT. You can track it on any of the main crypto exchanges or on TradingView itself. This is the tick SHIB USDT, and you can follow through. And do the same and say, I'm telling you this is level 1. Now it's for this field here, so it's creating level 1. Now we have a microstructure, which is a probably I need to see, but as for now, it seems to me a market maker bullish program, market maker bullish program now on level. So it means that prices are falling to then maybe distribute level 1, level 2. If this bar is so it's not a buying program, it's a selling program. This is a selling program. It's a bullish trend line, which means that it's a market maker sell program. Let's see. So this is going maybe to deliver lower prices. And we can now go to the 15 seconds chart and explore what's happening here. Yeah, indeed, it's a buy program. It's a buy program. This is it starts here, level 1, level 2, level 3. You can see now it's taking liquidity below, and hopefully now we're mitigating some long positions here above. After mitigating, good, but it seems now, or it could just fall, because sometimes when the market makers enter, prices just move very strongly. So yes, it's mitigating some highs now, started to mitigate after taking the lows. So it's something that you should expect to happen. So now it's mitigating, which is the ultimate target, this. But you don't need to reach that. Why? Because this is, see this other block, this should be the smart money shift here. So you have this mitigation here, and this mitigation could hold, because also this area has been traded already. See all these small bars here? If prices just move up into this area, chances are that prices are really moving higher, just because the market maker model ended. Yeah, good, Diego. Nice to see you. You know that I was on Forex Factory, and people told me to release videos in English, and I really don't have time to create the main videos in English, because however, I want to say that for this, when we see this pattern, I'm mostly bearish right here. So I may be hold, because you see the pattern here, but we are bearish. The structure is bearish. Okay, and now it has mitigated the longs, and it's continuing its move to the downside. It's expected. It's nothing unusual this to happen. It's nothing for sure that it will happen, but it's nothing unusual. And I really don't have time for editing this, because I'm doing this live, and it's easier because, well, okay, I don't edit these videos. But when I'm creating the content, I always editing, and it takes like 2, 3, 4 hours to create a video, and I usually I do this on weekends, and when I have a bit of free time, but I don't have time for creating all these videos in English. So I decided to just record a few ones in English while I'm training live on the weekends. That's it. So it's late. Okay, it's too late. I'm leaving this video. I'm ending this recording right here. You can track. This is 28th of November 2021. You can track this price in the future, what happened afterwards, and then you can take all your own conclusions on everything, because no matter what I tell you, for me it would be very easy to cheat you, and I will show you how. When I say you, I mean everyone here, because it's very easy to make you see things that doesn't exist, and I will show you now. There is a trick, it's a very easy trick. I saw to make to Anton, which is a very good smart money trader. You know the resistance theory, so let's just do this. So I'm going to just play this random, completely random lines here, and I'm going to prove that support and resistance work. Um, so yeah, just placing random lines here and there, completely random. I don't really have it, so I'm going to check past values to that are not now here at this. It's random, completely random, these lines. I can cheat you if you want to. So I'm going to the past. I could go to the future, and I will show you that this proves that. See how exact was this move? Oh, see how prices are reacting here in my line? Oh, how here price is just moving up and retesting my support line. I'm proving you that support and resistance exists, just drawing random lines. So what I mean with this is that see this week how reacted to my random line. Here's all this accumulation on my random line, and see how prices just move up and fall on my random line. And I can tell you that it was not random, that it was support and resistance, and I can give you a very good detail on this if you pay X money on my private group. So I mean with this that don't believe what I say, don't ever trade what I say, just test it yourself. And if you see it works over uh, hundreds and thousands of tests, then you're right to uh, make a decision on it. But don't believe what I say because it's very easy to make you see what it doesn't exist. And support and resistance lines do not exist. It's a fake. It's just retail shit. And see how perfect is price bouncing on my lines. They were all made randomly, all created randomly. I don't know what I was doing. So there is more than what you can see, what I want you to see, because I can make you see only what I want you to see. And your brain, our brain has what is heuristic think, is heuristic patterns. It's a also bias, and it's a mechanism that is very convenient for survival because it reduces the complexity of your analysis to the basics. But in trading, you need to go beyond that, and you need a lot of, and that's what you need, a lot of exercises, a lot of time, a lot of years, maybe at least a lot of months and a few years probably to accustom your brain to see what actually is not what you want to see, but what exists is because you hear what exists, because you here want to see that uptrend that would make you earn money, and here you will see that resistance that you could be selling at to make money, and that's what you want to see, and that's what your brain is focused to see because you're biased, and you cannot avoid that. I cannot avoid that. The only thing we can do is just train hard, train for years, train for months, a lot of hours, a frustration until we create new patterns on our brains after we spot the right structures. And after trading and trading and trading and seeing these structures once again and once again, then our brain will start to see what we have to see, not what we want to see. And I just wanted to stress on that fact that everyone needs to practice, and you shouldn't be believing what I'm saying here. Okay. Um, and that's it. So yes, I won't be into. I have the private group, which is mostly in Spanish. For now, it's in Spanish. It's not in English. I'm not providing yet because the private videos which extend what I'm teaching here are still in Spanish, and they're not uploaded on YouTube because I'm talking about the Twitch to mention. So I'm not giving real time interaction here. Because I've uploaded to a private server the videos that cover all the other, and I'm still producing them. I have that pre-launch offer on the website for that, and all in Spanish. So if I eventually will release it in English, I will just I don't know, because I'm focused more like on other languages such as Chinese, because I think that there's a lot of English contents on this smart money concept. So I would be just duplicating basically what it's already out there, and it makes no sense for me. It depends also on the if people ask me to, but I don't know. I think there's no need for that. And anyways, so now what I want to communicate, it's here on the channel now, right now. It's true I won't be making interactive webinars here to the public, to the public uh, social platforms or access. I won't be giving that because it's not. So what I recommend is that with the contents I've already released, with the contents I've already released, you can create that uh, system, and just it will be very difficult for anyone to make that profitable system. It is for me. It is for anyone like that. It's not easy. Now, if you see this works, and when I say you, I don't say the person who is, and I don't mean Diego. If anyone sees it works, just put it in practice. And if you see you make money on it, that's good for you. Okay. And basically, I insist this channel contains information more than enough for you to create a strategy that will help you get risk reward ratios about 1 to 5, 1 to 6, easily, easy. And then that would be maybe the potential risk reward ratio 1 to 3, 1 to 4 to 1 to 10. I think that you could easily get with what I've offered here, that it's much more that than what you get from, I think, almost every book out there or every course out there that I was usually targeting 1 to 2, 1 to 3. So I think it's more than enough, and it's all for free given here. And it's complete. You don't need to look further. I don't tell you the concept, half a concept, so you then need to pay or need to go. No, I'm taught everything I needed to taught, so the system is complete end to end. So I think it's fair for you. One of the things I think is that information should be free for everyone. Okay, so this is information. This is valuable information, and don't think that because it's given for free, it's not valuable. Okay, because there is a lot of things here that I think that could make you beat any but most of the traders out there, and of course any of the retail traders out there, basically. So I'm trying to say, do not try to think that you need to know more things or know better how other blocks work or know better how other things that I haven't said work, because if I haven't said it, it's because I want to reduce to the minimum the contents of this channel and also the contents of the private group that I'm still producing. Okay, because it's better, the less the decisions you need to take when you're trading, the best for you. The lesser the decisions you need to take. Okay, bye. Too late now. Anyways, Diego, thank you very much for interacting. I really appreciate that. Okay, that you were there and that you're following this. And if any of the viewers want just to leave some comments on the videos and suggesting a topic to cover, free to do it, completely free. Okay, and if anyone's I've also seen on File Factory people asking me to translate to English. I really don't have time for it, but if anyone has time to synchronize the voice in English, I can just add it to a video and upload it in English, as long as it's synchronized or anything like that. I can do that. Okay, but for now I really don't have time for creating extensive videos in English. I will continue doing this in Spanish because one of the main ideas or one of the main purposes of this channel was just offering to the Spanish speaker these smart money contents that really don't exist in Spanish as far as I say no, at least for free. And I don't know the kind of quality, but if you're good at this system, you could deliver a full course like this one for free. It's not, you have time for doing it, you can do it. Then if you have the private group, it's okay, it's better for you. Okay, people say, you earn money Trading, why you want money for teaching? I like money. The more money, the better for me. That's it. It's logic. I think everyone, no one wants to work for free. That's against any uh, how the human rights. It's against the human rights. Most basic human rights is something logic. Okay. However, take care. Practice hard, study hard. This is very, very difficult. This is not easy. This is not something that cannot be taught by conversations, cannot be taught by watching videos, cannot be taught by reading anything else, or making taking courses. You need to work on it yourself. On I recommend simulated accounts like the how's the name? The Forex Simulator. Soft FX, Forex Simulator. I usually recommend. Also, you can do it with TradingView. I don't recommend that. There are other tools there. You can do in demo, but demo is very slow, so it's up to you. And that's the only way any person can learn how to trade. There's no other way. That trading, losing money. We all lose a lot of money. Before we start to make some money, we lose a lot of money, a lot. So this is another reason why you could not be giving away everything for free, obviously. But this is enough. This is enough. This is much with. I wish I would have known this when I started, because with this was actually my first approach to smart money concepts, to ICT, to Michael Huddleston's ICT. This was when I realized this breaking mask structure, this take of the lows, smart money shift, multi-trend time analysis, premium discount. I was not even able. I was not. It has taken for me years to understand this market maker process. Years to understand, and a few thousand of euros to understand this, paid to the markets. So now you have that information for free. That should be enough. Okay. Bye bye.